Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Tuesday, and this is the 1st of October, 2024. I want to wish one and all a Happy New Year. I think that's fairly important for everybody. It's a Jewish New Year, by the way. And, you know, just yesterday I wrote in my news report, that tomorrow we'll have a lighter volume day. The Jewish people around the world often go to the temple, their synagogue that day. And they won't be trading, all right? They'll be back to business as normal most the day after, all right? The ultra-religious take off a couple of days, all right? But what I wrote about was I said, boy, wouldn't it be something if Iran attacked Israel on that day with possibly the Houthis doing whatever they can, Hezbollah for certain, and in Gaza, the Hamas. So you did see, I woke up this morning and I go, well, there you go. The Houthis hit some ships in the Red Sea. And I did my reports, and all of a sudden I'm watching TV and I see the breaking news. And the breaking news is that Israel's going to be under attack, that some different parts came out, intelligence from the U.S., and it was imminent. Okay, on you go with CNN, because they normally have terrific coverage right through Tel Aviv, and they did. To make a long story short, Israel got attacked. And via the attack, about 180 missiles were thrown at them. Most were intercepted. I don't believe all were intercepted. I believe most. The other side of the story, Iran, through its news agencies, was saying 80% of the missiles got through. I don't know what got through means. Did the debris fall on Israel? It did. So maybe that's what they mean. I don't know. Let's go somewhere else for a moment. I'm going to bring you right back to this because it's important for what's going on. Remember, I have a silver report that's up right now. It's going to go off the board tomorrow. So if you want to see it, you go to iraepstein.com. You can't miss it on the top left. It'll say silver report. Trend and chart analysis don't look like this. The charts with Bollinger Bands, a number of moving averages. I'll cover weekly charts, daily charts, price counts, seasonal charts, all right? The impact of world events, boy, that was this timely, and give you trading ideas in silver, SIL, the ETF, and SLV, the ETF. So I'm going to give you a lot of data. iraepstein.com, and you can move a cursor there. Now, in terms of the news of the day tomorrow, we're going to get the Mortgage Bankers Association numbers at 6 in the morning. The indexes, we'll see what they do. ADP, normally this would have been an important number because it's going to come out with the net change. Right now they're looking for more jobs, about 20,000 more than they had last month. We had the first round of API stockpiles, and they came out today at 3:30 and down, and then we get the EIA number at 9:30. But we got to go back to today's importance because Israel's going to retaliate. Now, what are the ways to do it? You can take out oil infrastructure, storage tanks, the like, but then the world gets pretty pissed at you because even though we have bans on them and so on, that oil makes way into the world, it keeps things in balance, and away you go. So I was thinking to myself, at what point does Israel finally say, this is the moment to go for it? And I'm no military tactician and don't think I am, but I have to say it. What if they go after the nuclear facilities? Do they have those type of bombs that can do it? Behind the scenes, you probably are going to hear that, many in the defense cabinet want to do that. Would the world like it? Well, if you close the doors, there'd be glee on world leaders everywhere. If they don't have a nuclear weapon or if those facilities were somehow severely damaged and puts Iran further back, I think that would be it. So that's one theory. The other is they just do it tit for tat. So here's what you did to us, here's what we did to you, and they continue on in the way that they are. The last one's probably what happens, but at any time you could hear about this nuclear. They're weeks away, supposedly, from having enough enriched material to create a nuclear weapon. That is supposedly. Israel, as you know, probably has hundreds of nuclear weapons. What do you do now with this? Well, take it out. I know what I'd be voting for. Okay. And that's not a nuclear weapon. Take out the nuclear facilities. Why not? Who's going to come to their defense? If you take a look at what you've got in the energies, of course they went up on this news because you're still worried what's the next impact going to be. Bonds and notes got a bid off of this. They shot through the roof. The dollar took off to the upside in a big way. Gold market soared, but it didn't make a new high. None of the metals made a new high, and that's a little bothersome. The downward pressure here is you're scared. Plus, we're still not out of that end of September, beginning of October. Remember what I told you. Typically, this doesn't mean it's a rock bottom date. October 10th is about when you end the pressure of the September sell-off that didn't exist this year, but it's still a date that you continue with. When you look at the E-mini S&P for the week, it's down 0.75% almost. Okay, not very much. The chart, though, is rolled over a bit, where you now have, and I can argue this, lower highs and lower lows. So the trend, if you define a trend as either higher highs, higher lows is up, lower highs, lower lows is down, and a higher high and a lower low is nothing, or a higher high here and a lower come up there, and then you drop back and you don't take that out. You're in a trend. That's the important thing. This one is trending down until, and I want to use this word very carefully, until the highs of Tuesday are taken out, and the likely target, if it keeps slipping, is probably the 5720 area, not very far away, 33 points away as I see it. The resistance is up here, but I don't know what's going to drive the market there. You've already seen the attack on Israel. What else do we have out there to drive this higher right now? So I'm not convinced you have that, other than we're going to get into the earnings season. We just ended a quarter, and we'll go back to that. Do you think the Fed's going to do anything off the numbers you're getting off the jobs report? Let me play this one out for you. How do you say that if you've got Boeing on strike, the longshoremen's? Between the two, you're about 80,000 people that are willingly on strike. Let's go to, by the way, they'll file for unemployment likely. Next step, Hurricane Helene. You think it's another 80, 100,000 people out of work off of that? Probably. I mean, it's not just the Carolinas. It's Virginia, parts of Tennessee, Georgia, Florida. You add that all together, devastation. And I mean, it's devastation. So you're going to have that coming on. So the numbers are now going to get sort of skewed about. And yes, the Friday jobs report doesn't take that all into account. That'll be the report after it, but at least we know what the Fed has to deal with, and they'll have some better numbers to work with. So I think you've taken the importance of the market out, and I think the market's saying, I don't think the Fed's going to go 50 basis points in November, if they even move. Don't know. Why? Well, if you get a strong ADP number, that's one thing. The JOLTS number that came out, if you recall today, a lot of people forgot about it, but it's normally an important number. The hires are down. The amount of people quitting jobs way down. What's up is the amount of jobs, but the employers are being very, very picky and careful because they don't know what kind of economy we're wandering into right here. When you look at the momentum, you lost a bullish reading. I think you're going back to that number. That's typically what I teach. NASDAQ, same thing. You're right on top of it, but that's probably where you're going. You're going to fight a battle, in my opinion, between 19,008 and 19,714. In the Dow, you lost your bullish embedded reading. So we have a story here that the upward thrust of the market has now been confirmed to have been lost. It cannot just come back tomorrow. So that's probably not going to be the case. In the Russell, you're already down to the neutral number of the 18-day average of closes. I call that red line, which is the 18-day average of closes, the line in the sand. Where did the market peak? The upper Bollinger Band. Was it embedded? No. If you've taken my courses, you learn about all that. Then we look about the 10-year note. So you had a big rally today in a lot of these because people ran for security. But when you're coming from under that band, you often go there, and that's the battleground. Does it work all the time? Nothing works all the time, but it's a high probability. It's exactly what happened. Same thing going on in the 5-year note. So then we go to the dollar index, and it's been fighting a battle at the 18-day average. It's trying to extend. I don't know. I don't know if traders need to buy that. Do you really need more protection from it is the first question you're going to ask yourself. Some might say until Israel does their attack, whatever it is, that they want that. Okay. But I don't think it's rallying other than because of the Israeli situation. And if the dollar's up, the euro typically goes down. Plus, if you're reading how the inflation is falling in Europe, it's almost a guarantee. As much as you can make a guarantee.